Can I tell a story of a strong economy? You bet I can. Do I believe it? Well, maybe not. But 30 years of forecasting has made me humble. And even though I'm not forecasting a strong economy, it could happen, so let's be prepared for it. I'm Dr. Bill Connerly. I connect the dots between economics and business, and this is our fifth and final video in the series, Business Planning with Risk of Recession. So far, we've been all about doom and gloom and how to deal with the possibility of a downside while still taking advantage of moderate growth, if in fact that comes. Today we're going to be talking about how to capture the benefits of an upside if that should come without rolling the dice and going all in, gambling that only an upside will come. So here's the story of stronger growth. First of all, the money supply growth rate was strong right after the financial crisis, but there's a long time lag. Then the Federal Reserve got cautious, slowed the money growth, and that's why we're in the malaise we're in now. They've been pumping up the money supply, and with a long time lag, I think we're going to see larger growth. In addition, look at manufacturing activity. Right after the bottom, we had fairly good growth, and then the growth rate slowed down a little bit. Well, if we could get back up to that stronger growth rate like we had a couple of years ago, we would approach our previous peak level of production. And at that point, companies would need to buy new equipment to expand their manufacturing capacity. So there is a possibility of a stronger economy. Now let's go through the steps that you'll want to take now to be prepared in case that stronger economy does come. Managing your business in a boom is a lot more fun than managing in a recession, but it's not all beer and Skittles. Let's go through some of the issues. Sales staff. In the downturn, your salespeople got discouraged. They didn't want to make outgoing sales calls. When business turns around, though, the sales orders are going to be grabbed by the people too stupid to know you can't sell anything in a recession. So fire up your sales staff, or get ready to fire them up if the economy turns better. Secondly, working capital. Now, if you get orders, you may have to lay out cash right now for materials and for employees. Your accountant will say that you're making great money on an accrual basis, but if your customers are not paying you for 90 or 120 days, you may not have any cash in the bank, so do some financial projections now. Production. You'd like to produce more because you'd like to sell more, but can you actually get it through your process? Talk to your vendors and make sure that all of your equipment is ready for stronger production. Vendors, can they really deliver? The sales guy will always say that they can, but you might want to have an adult conversation with the senior management of your critical vendors. Finally, staffing. You may need to hire additional people. Can you find them? Do you know where you're going to find them? And the important lesson here on these list of issues is not that you need to staff up today or get new equipment, but you need to be thinking ahead. So on staffing, you might say, gee, who would we hire? Do we have some resumes? Can we get in touch with the people we laid off and say, hey, we just want to be ready if there's an opportunity to bring some folks back? And the same thing with vendors and production. Just learn now what your roadblocks are going to be. So this is the operational side, but in stronger times, you need to think about strategy. We'll do that next. Let's talk about strategy. We've got ups, we've got downs. What is the best thing to do at different stages? A few years ago, the McKinsey consulting company looked at the top performing companies, and they said the top performing companies use the strong period to pay down debt and to build their financials. They used the downturn to buy other companies. So they did their acquisitions when the market was weak and built up their finances when their sales were strong. And that's exactly what I'd recommend you do. Most companies do it the opposite way. When things are booming, they take on too much debt, they buy their competitors at inflated prices, and then in the downturn they're in trouble. So think about, if the good times do come, you're going to want to improve your financial condition, use that strong sales, strong earnings to get in a strong financial position, so the next time we go into a downturn, you'll be able to take advantage of it, by some of the weaker competitors. I have more about that in my book, Bizonomics. You might want to pick up a copy. Well, this is the final video in our series, Business Planning with Risk of Recession. The theme has been plan ahead. You don't actually have to pull the trigger on very many of these things, but you have to be ready to make a quick decision if the economy goes in a direction that you're not expecting. I'm Bill Connerly for the Bizonomics blog and Forbes.com.